computer. Perfect. So I believe the recording is on. Can you just confirm if it started or not? It's recording, right? Yes, perfect. Okay.
Yeah, it's recording.
So welcome everyone. This will be today's backtesting session. And once again, happy Easter to everyone who celebrates Easter. Let's just begin our session because we are almost 10 minutes late with this session. So as usual, I will just generate a random number. Let me just check the last trading day on April, which was last week, 15th of April. So we will backtest from 15th of March to 15th of April. Let me just random number generator. Okay. Minimum 1, maximum 31. Generate. And it's 1. Okay. So that's 15th of March. Okay, guys. So we've backtest 15th of March. And what do we usually do before we start our backtesting session or live session or every single session? What do we usually do? We have to do this every single time.
Check news.
Check news, exactly. Thank you. And someone just typed in the chat that sound doesn't work for me. I don't know what the problem could be. Everyone else can hear me. So let me just check the news. Which day was it? 15th of March, right? 15th of March. Yeah, 15th of March. Okay, as you can see, there won't be any high impact news during New York session because this is the only high impact news during the day, but this has been released before the New York session. So we don't really care about the news anymore because these aren't relevant to us because these aren't high impact news. So yeah, this will be a perfect session without the news. And let me just answer the chat first. That can we ask questions related to trading, tactical in the session? Yes, you can, but mainly after the backtesting session, because after the backtesting session, there will be a question and answer section for this. And you'll be able to ask your questions freely after the backtesting has been finished. And I will answer every single question after that part of the session. So let me just replay price to 15th of March. Where is replay? Here's replay. 15, 15, 15, 15. Here it is. New York Open is right here. Okay, let's go back to the 4-hour chart. Perfect. So let's just start the price action breakdown on the 4-hour chart as we usually do. And what can we see on the 4-hour chart? Of course, if I zoom out, we can identify that the main trend on the 4-hour chart is still extremely bearish, right? You can just simply—
It's 1 hour chart.
This is 1 hour, yeah.
It's
yeah.
hourly.
Yeah. Thank you, guys. Okay.
Yeah, no issue.
Same goes on. What can we see if we zoom out on the 4-hour chart? We can see that the trend is extremely bearish still, right? Creating highs, creating this high, creating a low, lower high, lower low, lower high, lower high, lower low, lower high, lower low. So the trend is extremely bearish, following the same pattern over and over again, right? Okay, what can we see at the current price action region down here? We can see that price is reacting on a demand zone here, which was a daily demand zone, and reversed on this demand zone. And price is currently on the way up to tap this supply zone up here. This is our bigger picture. And yeah, I love this demand zone right here and this supply zone right here because these are two significant supply zones and supply/demand zone, sorry. And yeah, this is the bigger picture. So the pattern, the overall pattern is that price is breaking through demand zones every single time as you can see. Basically, this was a demand reaction right here of this demand. This was a demand reaction right here of this demand. This was a demand reaction right here of this demand. So price is continuously reacting on demand zones, as you can see, over and over and over and over again, and breaking through these demand zones over and over and over and over again. So the pattern is extremely bearish because demands aren't getting respected, right? Every single demand is being broken over and over again. As you can see, here was this demand reaction, some corrective pullback to some sort of supply zone right here. Liquidity sweep at this region swept this liquidity, reversal to the downside, demand break. Again, corrective movement to the upside, supply reaction, liquidity sweep right here. Again, downside movement, huge inefficient downside movement. Tap of this demand zone right here. What can we expect right here? We can expect the supply tap, sweep of the liquidity, and reversal to the downside again, right? This is the bigger picture. This is what we can see on the 4-hour/daily chart. This is our whole bigger picture. So we can identify that our overall higher time frame bias is bearish, right? Okay. Sorry, let me just drink water. Okay, so let's just see the zoomed in higher time frame picture. As you can see, this is the 4-hour chart, and here was a demand reaction. This was a demand reaction, and I believe this was a daily demand zone from far away right here. Yeah, this is a daily demand zone. Prices reacted on this daily demand zone. What else can we see? We can see that prices change character here to the upside. Sorry, guys. Can you see the names on the right of the monitor?
Yes, they
These
just
names?
popped up.
Yeah, right there. How can I actually delete these from there? It's smaller right now, right? It's just a small window right now.
Yeah, no issue in that.
Right here, right?
I don't see it.
You don't see it?
No, I don't see it.
This is actually frustrating because on the recordings you can see the names, but I don't know how to remove the names from the screen. So let's just beat. Okay, let me just continue. What else can we see after the daily demand up right here? We can see that prices change character here to the upside with this movement, right? And after this, prices created a bullish order flow to the upside, reacted on some sort of supply zone in this region. Basically, the supply zone was right here. It was a supply reaction, as you can see. And after a supply reaction, price has reversed to the downside here. But before the reversal, it swapped liquidity to the upside, right? Here was the reversal. Here was the reaction on the supply zone. This reaction has created equal taps right here. First tap, second tap, and here was liquidity too. And after a reversal and reaction, prices swept all of this liquidity to the upside with this wick, right? This is a perfect liquidity sweeping wick. And after this, prices reversed immediately to the downside and started a bearish order flow, which was leading to what? It was leading to a demand break and a change of character right here. As you can see, let me just change the color. This was the less recent demand zone that has created the less recent break of structure here to the upside. And from this demand zone, the inefficient push has started here. And as you can see, after the reversal on this supply zone and the liquidity sweeping movement, prices broke below this demand zone. And for change of characters, wicks are perfectly enough, right? For break of structures, we need body breaks. For change of characters, we need wick breaks. And as you can see, this was a less structural low point, less structural demand point, which can be broken with a wick only. And there was a wick break only. And the only confirmation that tells you that this wasn't even a liquidity sweep, that price broke below this demand zone 2 times, right? Here was the first break. It didn't break below with body closure, so it could have been a liquidity sweep. But if price doesn't reverse immediately after a kind of liquidity sweep like this, and it breaks above the demand zone once again with a wick closure, then it will be a break and not just a liquidity sweep. Because if this candle couldn't collect the orders and couldn't sweep the liquidity from this region, then this won't collect any more orders because the orders have been collected by this candle. So this confirms that this was a break and this was a break too. And this is not just a liquidity sweep. So we can consider this demand zone as broken, right? Okay. Can you just mark on my screen that what did cause the break? What's the cause of the break? Thank you, Nikita. You're being first every single time in the sessions. So thank you for being active. Exactly. What is this? I mean, Hadid is requesting a remote control. No, I will decline it. So here was a supply zone that was leading to a break of this demand zone, right?
Sorry, but how can you draw on the chart?
How can you draw on this chart? I don't know. As the others.
The same question, how can you draw on the charts? I too don't
In the
know,
chat,
actually.
please don't interrupt me. Thank you, guys. So, please, guys, mute yourselves, everyone. And don't unmute you unless I ask you to unmute you. Unmute yourself. Thank you, guys. Okay, where was I? So this supply zone was the cause of the break of this demand zone, right? Right. What else can we see? We can see that price has reacted on this supply zone here, as you can see. And after the reaction, I mean, before the reaction, prices created liquidity because here was the first reaction. Here was the first reversal, but this reversal has created equal taps right here at this region. And after the reversal, prices created a break of structure to the upside right here at this line and swept all of the liquidity from over this liquidity line, right? And tapped some maybe 15-minute supply area right here at the top of the zone. So it has mitigated more than the 50% of this zone. So what can we expect after this kind of mitigation and this kind of liquidity sweep? We can expect a reversal to the downside and the continuation of the May trend, right? So let me just switch to the 15-minute chart. let's see what's on the 15-minute chart. As you can see, here was the first supply mitigation after the demand reversal right here. And here was a liquidity creation also. Here's a perfect liquidity line, as you can see. First tap on the 15-minute chart, second tap on the 15-minute chart, and third tap on the 15-minute chart. And these triple taps have been swept by this movement, right? And this movement has tagged us into a refined 15-minute supply zone up here, or even this was the right supply zone. This is the right refinement of the 4-hour chart, as you can see, because from the supply zone, price has changed character here to the downside. This was the less recent demand zone. And from the supply zone, price has changed character here at this line with an inefficient push. And as you can see, after a liquidity sweeping movement right here, price has tapped into this supply zone. Okay. So let me just zoom in on the 15-minute chart. As you can see, this was the less recent 15-minute candle that has caused the tap of the supply zone and the liquidity sweep. Okay, this candle is too huge to be a 15-minute candle, and there's a rule goes on for this type of candles. As you can see, this is a huge candle. Let me just count the pips. 53 pips only by this 15-minute candle. So this candle is too huge to be a real candle. This candle's purpose is only the liquidity sweep. So if you see a huge candle like this on the 15-minute chart, this has been caused by some sort of news, I believe. So this was a news candle. So if you see something like this on the 15-minute chart, you can expect a break of this candle, because huge amount of money has been pumped into market right here, and that money has to be collected. And the main trend is bearish. So if you see something like this in a counter trend movement, and this is a counter trend movement, these candles are usually being broken. Just compare this candle to all of the other 15-minute candles. As you can see, all of these candles, all of these 15-minute candles are normal 15-minute candles. All of these 15-minute candles are normal 15-minute candles. If you see something like this huge of a 15-minute candle, these candles will be broken sooner or later, but these will be broken. Basically, this is a rule. There's a 50%, not 50, maybe even a higher 70% chance that all of these huge 15-minute candles will be broken. You can actually backtest these concepts. I started to backtest these concepts last week, and I will update you guys about the actual updates. But I have to backtest more of these candles. But if you do backtest these candles, you will notice that all of these huge inefficient candles caused by the news will be broken sooner or later on the 15-minute and the 4-hour chart. So as you can see, there was this huge 15-minute candle too, and this huge 15-minute candle too. All of these two candles have been broken sooner or later, right? This candle has been broken by the following candle. This candle has been broken with this movement, and this candle has been broken with this candle, and this candle will be broken too. Yeah, guys, I will actually update you with the updates about this concept. I started to backtest this a few weeks earlier. But yeah, seems like it's working, and all of these huge 15-minute candles are being broken sooner or later. But let's go back to the backtesting session. Let's talk about the expectations. Okay, what else can we see? So the liquidity sweep has happened right here from this candle. I will just type the sweep right here. 15-minute sweep. Let me just read the questions. So we should wait 15-minute chuck and enter after 1-minute chuck. What do you mean? So here was the 15-minute sweep candle and demand zone that has caused the overall break of structure, last break of structure right here, and top of the supply zone. Okay, what else can we see? We can see that prices created liquidity for this demand zone and swept the liquidity inside of this demand zone, right? So what can we expect from price right here? Here's this much more valuable demand zone down here. And why am I saying that this demand zone is being much more valuable? Exactly, thank you, Chuck. Because this demand zone has liquidity just about. Here's the first bottom, here's the second bottom. And this is liquidity. This zone is liquidity built up for this downer area, right? And just by explaining the thing to you guys that this candle will be broken sooner or later, so meaning this demand zone will be broken sooner or later, this is one more confluence for the break of this zone and the top of this deeper area. Because as you can see, the overall change of character has happened from this candle. The overall change of character and several change of characters has basically happened from this candle, because as you can see, this was the less recent supply zone at this region that has caused the less recent low point right here. And all of these movements couldn't body break below this wick right here. So this was basically the last recent supply zone. This isn't a supply zone because it couldn't break below this last structural low point. This is the last recent supply zone that we can rely on. And the break of this supply zone and the flip of this supply zone has been happening from this candle, right? As you can see, this is the supply zone. Prices reacted here on this supply. Here was a reaction, reversal to the downside, couldn't create a new low at this movement. It couldn't create a new breakout structure here to the downside. And from this candle, prices fled this supply zone to the upside right here with this movement, and even built up liquidity for this demand zone. And here's the demand, liquidity line, right? Here's perfect double bottoms built up for this demand area. So what can we expect on the 15-minute chart? We can expect the break of this demand zone, and we can look for short opportunities down to this 15-minute demand zone. Because as I said, you have to build a plan before every single session, right? You have to build a plan before every single backtesting, live session, forward testing session, everything. You have to build a narrative around price. And if you do build a narrative around price on the 15-minute and the 1-minute chart, you'll be trading with a plan. And if you're trading without a plan, you'll be lost in the markets. But if you do build a plan before the session even starts, you'll trade with a plan. And if the plan doesn't work out, you can just simply build a new plan, right? So that's what we are doing right now. We are building a narrative. We are building a plan for the upcoming session. So our overall plan, let me just zoom out. Our overall plan, let me just remove this drawing from here. So please, guys, if you draw on my screen, just remove immediately. I don't want to deal with these things. So what we can expect here. Let me just go back to the 4-hour chart, sorry. Okay. I'm here. So this is a 4-hour demand reaction right here. And there are signs of the weakness of the bull run. There are signs of the weakness of the bull run. The first sign is that demand zone has been broken several times. Here's the first break, here's the second break. The second sign that if this demand zone was real, it has been real, then this demand zone should have breakable this less recent supply zone, and it should have created a less recent breakout structure here to the upside. And as you can see, it seems like price is reacting on this supply zone strongly. And there are signs that this demand zone will break to the downside. So there are two signs of the weakness for the bull run. Okay, what's the actual narrative right here? What's the actual plan on the 15-minute chart? We can expect from price that price will break below this demand zone. That's your first plan. And if the break of this demand zone happens, or I believe there will be a refinement on the 5-minute chart, even somewhere around here or somewhere around here. And if the break of that zone happens, or price can just break above these supply zones up here and keeps failing to break above these supply zones, we will look for short opportunities. And that's the first plan. The second plan is if price creates a breakout structure here to the upside and breaks above this supply zone, breaks above this structural high point, we will be looking for long opportunities. And if the break of this high point happens, we will be looking for long opportunities somewhere around from this demand region that has caused the break of this high point. But if price reverses somewhere around here on the 50% of this supply zone, then we'll be looking for short opportunities again. Because if price reverses on the 50% of this supply zone, that means that this supply zone is being fully mitigated. And if the supply zone is being fully mitigated and it reverses, so it can break above this supply zone, that's the last and third sign of the weakness for the bull run. Okay, so we had a narrative. We know every single scenario. If this demand will be weak, we'll be looking for short opportunities. Is this supply breaks, we'll be looking for long opportunities. And basically that's all. That's our narrative right here. But I'm actually aiming for shorts right here. My narrative is short right here, and I'll be looking for short opportunities because the higher time frame, the 4-hour chart, is bearish. The 50-minute looks like it will turn into bearish because this candle will be broken sooner or later, as I said. This confluence is leading down to this demand zone. So every single sign is leading down to this demand zone. So every single sign is leading for short opportunities somewhere from around here, right? And one more sign. Exactly, thank you. That's the second sign. The second, another sign that there's liquidity again. There's liquidity trend line. And the most important sign on the 15-minute chart is that, as you can see, prices reacted on this demand zone. Prices mitigated this demand zone, as you can see here with this step. But it reacted on this supply zone. Spread the liquidity. Here was liquidity, as you can see. First, second, third, etc. Many taps right here. Prices spread the liquidity, tapped into some sort of 1-minute supply zone up here, after a liquidity sweeping movement right here, and reversed to the downside immediately. So if this was a real demand, if it was a real demand, then this demand should have break above this supply zone. But demand couldn't take over control from supply, right? So supply stayed in control right here. So this wasn't even a real demand because it couldn't break above this insignificant supply, because this isn't a strong supply. This is a weak supply. This is a sub-supply, substructural supply point. So if this theoretically strong demand couldn't break above this supply zone and reacts on this supply zone, that will be the last sign for the weakness of the bull trend. Is it understandable yet? Could you follow me? Let me just drink.
Yes, yes.
Can you follow me, guys? Yes.
Yes.
Yeah,
Perfect.
bro.
Okay.
Yeah, yes.
So we built a narrative and plan for the 15-minute chart. Let me just switch to the 1-minute chart. Sorry. First to the 5-minute chart and refine this zone. And actually for the second zone right here, we can't really find the good refinement, as you can see, because basically this candle is efficient, this candle is efficient, or this isn't efficient, this is inefficient, this candle, but this is outside of this demand zone. So I will just leave this 15-minute zone the way it is. I won't refine this zone. And as you can see, even the refined zone in this huge movement on the 5-minute chart, okay, this movement has been caused by the news. I'm 100% sure, because if you see something like this on the 5-minute chart, so 50 pips in one single 5-minute candle, this has been caused by the news. And all of these news candles are being broken. This is basically a rule. Every single, this inefficient huge candle caused by the news will be broken. You have to backtest it. You will backtest it and you'll notice that every single type of these candles will be broken. Okay, but let me just continue. So we built a narrative, add new 5-minute zones. It's, yeah, we could, but the same goes on again, just like on the 1-minute chart, as you can see. The 1-minute chart will be much cleaner. 1-minute chart will be much cleaner. I don't really like adding new 5-minute zones. I like to add new 1-minute zones instead of the 5-minute zones. So as you can see, the same goes on. You can see literally the same thing on the 5-minute chart, like on the 15-minute chart. Prices swept all of this liquidity from this region. Then after liquidity sweeping, it created a tap of this supply zone and then immediate reversal to the downside. And this is proving the weakness of this demand zone, because this demand zone, after a tap of this demand zone, price couldn't break over this supply zone here, right? So this is proving the weakness for the bull run. As you can see, after liquidity sweeping movement, this could have been a really good entry opportunity. As you can see, I will see that if this was a 1-minute zone, because if this was a 1-minute zone, this could have been a really good entry opportunity. So as you can see, price will change character right here, because this was the last structural low point that has swept the liquidity to the upside and tapped this supply zone. And it seems like price will, please guys, mute yourselves. I can hear your background noise and it's annoying. Please just mute yourselves. Okay, so price will break below this structural low point, it seems like, because this is a huge candle. This is a huge wiki candle that has been caused by a liquidity sweep. And all of these candles, all of these wiki candles can be only caused by the banks and institution funded facilities. So yeah, I believe this low point will be broken and we'll see the break of this demand zone even. Okay, let me just switch to the 1-minute chart and start the backtesting session and see if this was a 1-minute zone. Yeah. Bro, are you using the supply and demand chain concept? And if yes, when are the chain broken? I'm not really using chain concept. So yeah, as you can see, this was a really clear zone, really clear 1-minute zone. And here was liquidity just below it. Here was one more liquidity just below it. Here was liquidity for the upcoming shorts. So this could have been a really good entry opportunity. But as you can see, this has happened. This step has happened in the lunchtime area. This step has happened in the lunchtime area. And I believe every single lunchtime zone has been
wasn't New
out.
York starting at this date on 1 p.m.? Or am I wrong?
Was it?
Of March. I don't know. I'm just thinking. Maybe.
Just ignore the fact. We are already too late.
Okay.
We are late. So for us, it starts at 2 p.m. right now. I didn't check it, sorry. I don't know if it started at 1 p.m. or 2 p.m. We are backtest from 2 p.m. to 5 p.m. That's it. We've missed this opportunity. I don't really care, but this could have been a good entry opportunity, as you can see, because all of the liquidity has been swept from this region, all of the liquidity has been swept from this region. And after liquidity sweeping movement, next zone, next recent valuable zone could easily reverse price to the downside and continue the main movement, right? This concept goes on really, really well for the main movements. And for right now, the main movement, main trend is bearish for us. So if there's liquidity, the next recent valuable zone, which is this one right here, because this change character here on the 1 minute chart, as you can see, and this was the 5 minute character changing zone too, the next recent valuable zone could hold the sweep and reverse price immediately. And as you can see, this is the perfect textbook example for this theory, because liquidity has been flat. Liquidity has been flat with this movement. The next recent unmitigated valuable supply zone has been tapped. Main trend is being continued to the downside. So I'm really expecting the break of this demand zone right here. But this is still in a lunchtime area. Yeah, so let's just play price forward. Let me just ask, was it all understandable? Can we just start the real backtesting session? And can I start forwarding price on the 1 minute chart? Guys?
Yes.
Yeah, bro.
Perfect. Okay. So let me just read. Or I will mark 1 minute zones too, because we could have marked 1 minute zones. Sorry, I forgot to mark 1 minute zones. Okay, we can mark another 1 minute demand zone down here, which has started the change of character. As you can see, here was the downside order flow, which has tapped this 50-minute demand zone right here. And from this demand zone, after a tap, after the mitigation of this demand zone, price exchange character from this demand zone to the upside, as you can see, with this inefficient movement, swept liquidity to the upside and created equal taps right here once more. So this is a character changing demand zone on the 1 minute chart. And I don't really expect much reaction on this zone, because as I said, I'm really expecting the break of this zone, because I'm really expecting the break of these huge candles. As you can see, this has been caused by the news 100% sure, because 50 pips has been created in 3 minutes, first, second, third minute. So this candle, this demand zone will be broken for sure. Okay, but we can expect a reaction on this zone. We can expect a reaction on this demand zone down here. And maybe we can even try a risk entry on this demand zone if there will be liquidity formation right here at this region. So if price creates liquidity for this zone, we can try a risk entry right here, because we are backtesting and we want to see the concepts, if the concepts are working or not. So as you can see, the break of this demand zone and the change of character after the top of this supply zone has happened. So the expected change of character right here has happened. Okay, what can we do in this scenario? We can mark the supply zone that has caused the change of character, right? Let me just turn the fake. And almost every single zone is a fake zone indicator, as you can see. So we can't really rely on these zones, but we can expect a reaction on these zones. And if I take a closer look, all the inefficient area and the first inefficient area can be found here. Here's the first inefficient area. And as you can see, here was a reaction. Price was reacting on some sort of demand zone right here with this candle. And from this candle, price has created the first inefficiency right here and created a change of character or demand flip right here to the downside. Okay, so this could be our first supply area that we could mark out, and we can expect a reaction on this zone, but we can't open a position on this zone. Where can we find this indicator? In the resources. It has been tagged so many times. So we can't really expect we can't really put an entry limit order on this supply zone, because this is a lunchtime zone, right? And you can't put a limit order on a lunchtime zone, but you can always expect a reaction on these lunchtime zones, right? Please just don't draw on my screen right now, because it's annoying me, and remove your drawing from here. So you can expect a reaction on this. Let me just remove the drawing. Jesus, guys. Okay. So you can always expect
but the supply is part of liquidity, or no?
This supply is part of the lunchtime liquidity. Yeah, that's what I was explaining.
Yeah, but it's double top, no?
Yeah.
There is a supply. Wait for me.
Please let me just continue.
This supply.
Please let me just continue.
Oh, okay. I'm sorry.
No problem. You'll be able to ask questions after this session, okay?
Okay.
You'll be able to ask every single question, and I will answer them after the backtesting session. So
okay.
Here's the first zone that has created the first inefficient area right here and broke below this demand zone and flipped this demand zone. So basically, this is a pretty valuable zone, and we can expect a reaction on this zone, but we can't put a limit order on the 50% of this candle because this is a lunchtime area. Okay. So second thing, I will mute everyone once again. Second thing, if price creates a liquidity line somewhere around here for this demand area that has created a first change of character right here, we can try a risk entry on this demand area, even though price is coming from supply zone, and even though price is in a supply trend, so a bearish trend, we could still try mitigation and the entry rate on this demand zone if there will be a liquidity formation, because this demand zone has changed character on the 1 minute chart on several places after a 15-minute demand mitigation. But I believe this won't be valuable because I'm expecting the break of this zone or even the deeper mitigation of this demand zone, this 15-minute zone. Okay, so let's just see how price goes and reacts on this zone. Okay. Seems like there's liquidity. We could consider this liquidity, but let's just place some more. And there's more liquidity has been created right here, as you can see. So we can really consider this as a liquidity. So we have two options right here. We can try a counter trend trade, counter trend long trade with a risk entry, and just trust me, guys, this is a really risky entry right here. So we can try a risk entry counter trend trade right here up to this supply zone. So if I set a limit order right here with 2 pip stop loss, that perfectly covers the zone. And if I target this supply zone up here, that will be a 1-to-9 risk ratio. So we can do this trade, or we can just simply wait for the top of this zone and reaction on this zone. And if price steps this zone and reacts on this zone, and for example breaks below this zone, we'll be able to execute a short trade right here. But second scenario, if price reacts on this zone and goes up to this supply zone, we'll be able to wait for a reaction on this supply zone, So the first reaction is the break of structure right here to the upside and continuation of the longs. And the second scenario is the change of character right here to the downside and short continuations to the downside. These are the two scenarios we are aiming for, because if price can break over this supply zone, and can't create a breakout structure here to the upside, as instead of creating a breakout structure to the upside, it creates a change of character to the downside, that will be a really strong sign of the weakness for the bullish trend. Because if price can't break above the supply zone right here, I mean this supply zone after the mitigation of the shifting in demand zone, and can break over the next recent supply zone after mitigation of the freshly new created demand zone, then the bull run is being weakened and we can expect the short continuations. Okay, so I'm asking you, should we try risk entry right here? I'm saying that go for that risk entry, and wait a minute, please, guys. Yes or no? Circle it. Yeah, yes. That's what I'm saying too. Go for it. I will clear the door ring. Okay. So I will just set an entry limit here. And actually, we got two more options. The first option is that we are setting a 1-to-5 risk-reward ratio trade. And because this is a counter trend trade, this trade is being considered as a counter trend trade. And usually in live trading sessions, if I'm trading live, I'm always hard tipping my counter trend trades in 1-to-5 risk-reward ratio. So just be realistic and hard tip this at 1-to-5 risk-reward ratio. And the second option is that wait for a change of character right here. If a change of character happens on this zone, we can enter in a trade. Okay, so I'm choosing the first option. I will set a risk entry right here, and I will hard TP this at 1-to-5 risk-reward ratio. Okay, almost stopped this out. That was fast. Almost stop loss. We are still in. Okay, we are still in. Reacting as TP. That was fast. Okay, this was a 1-to-5 risk-reward ratio counter trend trade, considered as a super risky trade. Okay, just note it for yourself, guys, that this was a really risky entry, and we are mainly aiming for short opportunities from this supply zone. Okay, change of character has happened right here, as you can see. Change of character has happened on several places, but there's a problem with this trade for the freshly new created demand zone. For example, this demand zone. Sorry, let me just mark this demand out and close these zones. So there's a problem with this new demand zone or even the upper demand zone. And what's the problem with these demand zones? Why can't you open a position right here? Why can't you open a position right here? And why can't you open a position right here? That's the first example right here. Thank you, Ramona. Exactly. Thank you, guys. This is the problem with this trade. Here's the first bottom. Here's the second bottom. You can't open a position right here on this demand zone because there's a high probability that this demand will be swept out because there's a perfect double bottoms. And this is a perfect 15-minute double bottoms. First bottom going up, coming down, mitigating the demand, reversing, creating the second bottom. So these kind of liquidity scenarios are really, really strong. You can't really open a position if you see something like this. This is a really, really strong liquidity scenario. Okay, so let's see what happens next. Reaction on the demand sweep. Okay, we've been swept out. What happens after a sweep? Deeper mitigation has happened here, as you can see, and almost the break of this zone has happened. So what happens after a sweep? First bottom, second bottom. What happens if the liquidity is being swept out? Thank you, Nikita. We can expect a huge reversal to the upside because liquidity is being swept out. All of the old orders are being swept out, getting stepped out. And all of the new orders have been placed right here. And all of the new fresh orders will push price to new highs. And we can still expect a reaction on this supply zone because this is a really, really valuable supply zone because this has changed character on several places, flip this demand zone, change character on this movement. And also it has a liquidity line right here, right? This is a liquidity line built up for this supply zone, but we still can't open a position on this zone. We won't open a position on this zone, but we are waiting for a reaction on this zone. Okay, let's just play price forward. Okay, as you can see, there's a nice reaction. And as it seems like price is reacting on this supply zone. And thank you. There's liquidity, perfect liquidity line. And as you can see, why did I choose the white? As you can see, here's liquidity line, and this is the last recent supply zone, and price is currently reacting on this last recent supply zone, right? Okay, still reacting on this supply zone and break of the supply zone, and the break of the supply zone has happened from this candle, from this 1 minute candle. Okay, perfect. So I wouldn't really open a position on this demand zone because there's still be a counter time trade, and there's not really much of a room right here. That won't be even a 1-to-5 risk-reward ratio, and I'm not opening a position under 1-to-5 risk-reward ratio. So I will just wait for the tap of this supply zone. I'm just marking this demand zone out, that this has caused the flip of this supply zone, and this has caused the sweep of this liquidity line right here, and this has caused the first inefficiency. So this is a valuable demand zone. This has caused sweep, flip, break, inefficiency. So we can expect a reaction on this zone. So for example, if price comes up to this supply zone, reacts on this supply zone, comes down to this demand zone and creates a change of character on this demand zone, I will enter on this fresh new created demand zone after a change of character right here. But I'm not setting a risk entry on this demand zone without, for example, a liquidity. Let's see what happens with this supply zone. Yeah, it has been tapped. Let's see if it was a perfect 50% mitigation. That was a perfect 50% mitigation, as you can see. Let's see if it breaks or holds. Seems like it's struggling. Okay, seems like it's holding. Still holding. And if I take a closer look, this is our only valuable demand zone right here. Because if you take a closer look, every single price action area above this demand zone is efficient. The only inefficiency can be found right here, right? There's no gap between this candle and this candle. There's no gap. There's no gap between this high and this low. No gap. There's no gap between this high and this low. No gap. There's no gap between this high and this low. No gap. No gap. So all of these price action areas are efficient. The only inefficiency can be found here. So two options. First option, price reverses right here to the upside, breaks above this supply zone, creates a flip zone, creates a demand flip zone, and we can enter on that demand flip zone. Second option, price steps into this demand zone. And between this, inside of this second option, we have two scenarios. Tap of this demand zone, change of character right here, enter in a long trade, which has less probability because the trend is still short, or higher time frame trend is still short. And it seems like price is reacting on this supply zone And as I said, if price reacts on the supply zone and can't break above the supply zone, that will be the last sign for the weakness of the bull trend. So the second scenario inside of the second option is the price breaks below this demand zone. And if the break of this demand zone happens and the flip of this demand zone happens, for example, we'll be able to enter in a short trade right here on this fresh and created supply zone. So we have a plan for the 1 minute chart once again. We have a plan for every single scenario, right? Let me just play price forward once again. Okay, it's inefficient. Okay, that has happened, as you can see. The top of this demand has happened. Prices reacts on this demand zone. And the flip has happened. Okay. The flip has happened from this supply zone, as you can see. This supply, let me just change the color. This supply has flipped the demand zone with body closure and inefficient movement. Here can be found the inefficiency, as you can see, between this high of the candle and between this low of the candle. There's inefficient break of this demand zone. Okay. A liquidity creation will be nice for this trade. So I wouldn't really enter without a liquidity creation. Or maybe I will enter. Let me just set an entry limit on this supply zone. Let's see how it goes. On the 50% of the supply, that will be nice because this is a perfect equilibrium entry point. So 1 to 5 short. And we'll determine the target if we are being tagged in the trade. Okay, we can actually consider this a liquidity creation. As you can see, this could be a liquidity creation because price is coming down, coming up, coming down, coming up. This is a liquidity creation for the zone. So I'm keeping the limit order there. Okay. Inefficient break of this demand zone. Sorry, I meant to delete this zone. Inefficient break of structure here to the downside. Continuation. So basically, this looks like one of my favorite setups because let me just draw it for you. Here's a demand zone. Price is coming down to mitigate this demand zone, creating a flip zone, creating a liquidity right here, creating break of structure to the downside. And basically, this looks like my favorite scenario, right? Here's the supply zone that has flipped the demand zone. Here's the liquidity built up for this demand zone. I mean, supply zone, sorry. Here's the liquidity built up for this supply zone, this supply zone. Here's the break of this demand zone. And here's the break of structure to the downside with inefficient movement. So basically, this scenario looks like my favorite setup. Seems really, really nice. Okay, there's more liquidity creation. As you can see, here's a perfect liquidity line being built up for this supply zone. And we are getting tagged in. Okay. So we are tagged in the trade. I'm just asking you, what's our next target point? What's the next target point for this trade? Exactly the next recent unmitigated 50-minute zone, which is this one right here. This will be our next target point for the shorts. And this trade could give us, let me just extend this zone. This trade could give us almost 1 to 20 risk-reward ratio. I will just remove, please just remove this drawing right here. Please just remove the drawings. Guys, please. Thank you. Appreciate it. So we are in the trade. Perfect. Let's see how it goes. Okay, goes pretty well. We are not setting break even yet. Okay, we are not setting break even yet because price couldn't break below this low point. We are not in break even yet. Almost tapped out. Let's see how it goes. Okay, not break even yet. And now we are break even. Okay, perfect. So this is a runner. This is a perfect runner for us. Let me just extend the zones. And as you can see, price has created another nice inefficient movement and break of structure to the downside and spat lots of liquidity from this region. There was an upside liquidity line right here, upside trend line liquidity for the shorts. So price has spat this liquidity with inefficient movement from this candle. Exactly. Thank you. Price has spat the the liquidity from this candle and created the first inefficiency. And yeah, basically this looks like a solid supply zone. And basically looks like price is creating a liquidity for this zone because the all inefficiency can be found right here and right here. And as you can see, all of these candles below this inefficiency are being efficient. So this could be considered as liquidity. And these areas are efficient. These are really, really efficient areas. So also the liquidity has been set right here. The break of structure has happened right here. And it seems like the break of this zone, this over a 50-minute zone will happen sooner or later. Okay. So I will gladly set an order limit on this zone, but I will wait for another liquidity creation. Okay. So this is a tricky situation because the break of this zone has happened, but still, this could be considered as liquidity. This could be considered as liquidity, perfect liquidity. And this fresh in your created supply zone, let me just close this zone, it's tempting me. So this fresh in your created supply zone right here at this region, what could this be? What's the problem with this zone? Exactly. This could be liquidity for the upper zone, which has created the original breakout structure, right? This zone has created the original breakout structure and the original order flow. And this has swept liquidity. This is a really, really valuable supply zone with liquidity below it. So I wouldn't really set an entry limit on this supply zone. If price confirms this supply zone with a confirmation entry change of character, I will set an entry limit on the fresh in your created supply. But I'm not setting an order limit on this supply zone. Let's see what happens. But I would actually gladly set an order limit, and what's this line right here? So I would gladly set an order limit on the 50% of this candle, because this is a perfect equilibrium entry point. 1 to 5 short. And the target point for this trade is still being this demand zone. Okay, 2-pin stop loss. Perfect. Let's see how it goes. Price reverses. Let me just see. Yeah. Okay. Price is reversed here to the upside, as you can see, and created perfect double bottoms. Perfect, literally perfect double bottoms for the upcoming. Where are my settings? What's happening on my chart? Okay, what has happened? Sorry, guys. Bear with me. So, perfect liquidity line for the upcoming shorts, right? And managing the second trade, first trade, managing the first trade. How will we manage this trade? I will still keep my stop loss in break even on this first trade, because seems like if I would set my stop loss here at this region, that will be still equal to the break even point. If I set my stop loss here, that will be the liquidity. If I set my stop loss here, that will be liquidity. So I'm still keeping the stop loss of the first trade in break even. That will be the safest option for us. So let me just play price forward. Perfect liquidity creation for the upcoming shorts, as you can see. Let's see how price reacts. Okay, price flat below liquidity. What can we expect after a liquidity sweeping movement? We can expect a reversal to the upside, right? And what can we expect a reversal? The continuation of the main trend, because there's still liquidity. And if the downside liquidity is being swept, there's still the upside liquidity. What happens after the upside liquidity sweep? Reversal to the downside after the next recent tap of the zone. After the tap of the next recent valuable zone, right? So the downside liquidity has been swept. Here's still the upside liquidity. What's the next recent zone? Valuable zone, this one. If the sweep of this liquidity happens, the next recent valuable zone will hold the sweep and reverse price to the downside. So this looks like a perfect criteria setup for us. Let me just remove these lines because these are annoying. Our price will just continue without us. That could still happen. More liquidity. Sweep of the liquidity is happening. More liquidity, sweep of the liquidity, more liquidity. As you can see now, here's the liquidity. So basically prices keep sweeping liquidity over and over again, as you can see, and keep creating liquidity over and over again after the liquidity sweeping movements. So liquidity is being swept and being created on the way up. So this means if the final piece of the liquidity is being swept, this zone will be able to reverse price to the downside. Okay. Jesus Christ. Okay. We are getting tagged in the trade. Perfect, perfect, and perfect reaction. And once again, perfect textbook example, as you can see. If the last piece of the liquidity is being swept, the next recent unmitigated valuable zone will be able to hold the sweep and reverse price to the main direction. And this goes on perfectly for the main direction trades. Short is our main direction. We are following the main trend, following the liquidity, combining the liquidity with the trend, combining the liquidity with the structure. And what are the results? As you can see, these are the results. This is the power of following the main trend. I'm actually surprised by this. I wasn't expecting this much of a movement, but okay. This is the power of following the main trend and liquidity. Basically, everything is moved by liquidity. If there's liquidity, you want to avoid liquidity and trade after liquidity is being swept. Okay, or still, our target point is still this downside demand area right here. And I will mute everyone again. So this is our target point still. Let's see what happens. Okay, so I'm setting my stop loss, the first stop loss right here at break-even point of the second trade, and I'm setting the stop loss of the second trade at break-even point. So we are maybe locking in 1% profit with this trade, and we are breaking on this trade. So we got two locked in trades running. This is perfect. And we got TP determined right here. Let's see how it goes. Okay, liquidity creation for the upcoming shorts again. Sweep of the liquidity. Let's see how it reacts. Actually, let me just check if this zone is this zone will be big. We won't be able to set a 50% entry on this zone because this zone
and it's end of the session.
And it's end. Yeah. Sorry, I couldn't even see it. It's end of the session. Yeah. Was it even in session? Yeah, this trade was in session. So the session has ended right here. I mean, sorry, not right here, right here. So this was in session trade. We took this trade inside of this session. So we can't really take any more trades outside of this session. So we are not caring about this supply zone. We are just managing our trade. Okay, let's see what happens. Actually, I will set my stop loss knowing the fact that this is the end of the session. I will set my stop loss right here, the stop loss of this trade right here, and stop loss of this trade right here. So we got locked in profits. Let me just check how many profits did we lock in. 5% and 6%. So in a total of 11% profit has been locked in for us. And I'm locking these profits in because the session has been closed, and I'm always managing my stop losses tightly after the session ends. So still letting these trades run. Okay, perfect reaction once again. As you can see, this is the power of following the main trend. This is the power of following the main trend and liquidity. As you can see, change of character right here, flip of the demand zone, sweep of this liquidity, following the liquidity, downside movement. Break of structure, following the liquidity, sweeping the liquidity, following the trend and liquidity, downside movement. This is the power of following the liquidity and main trend movements and structure. This is perfect. Okay, and TP hit. This was perfect. Let me just count the overall profits for this session. So the first trade was 1-to-5 risk-reward ratio. 1-to-5. Second trade was almost 1-to-20. 1-to-20 risk-reward ratio. Third is 1-to-19. So overall, I can't really count. It's 34. Yeah, it's 34 risk-reward ratio. No, not 34. How much is this? 44, right? Yeah. Thank you, guys. Yeah, I'm a bit tired. So yeah, this is 44 risk-reward ratio for this session, for only a New York session, for only 3 hours of trading, 3 hours of work, and we booked 44 risk-reward ratio. Even if you're risking 0.5% per trade, this is a 22% gain in one single New York session. Right, guys? This is insane. And what are the confluences? That we are following the main trend. We are following the main trend. We are following the liquidity. As you can see, combining the liquidity with the main trend is a killer. It's the real game changer. As you can see, just look at this pattern. Look at this pattern. Supply zone up here, liquidity for the supply zone, following the main trend, sweep of the liquidity, tap of the supply zone, continuation. Supply zone up here, liquidity, perfect liquidity build up for this zone, following the main trend, sweep of the liquidity, tap of the supply zone, continuation. Following the main trend, supply zone, liquidity for this zone, following the main trend, tap of the supply zone, sweep of the liquidity, continuation. Once again, liquidity, supply zone, following the main trend, sweep of the liquidity, continuation. And this is the perfect combination for the liquidity and for the structural point. This is the killer setup. Basically, guys, all you have to do is learn these kind of setups, learn these kind of scenarios, and you'll be unstoppable. Combining the liquidity with the structural points is making you a beast for real. Markets are moved by liquidity. Everything is moved by liquidity. If you can learn how to read the liquidity, how can you play with the liquidity and what can you expect from liquidity? And I've explained the liquidity scenarios literally 100 times for you. I even created a session last week for the liquidity scenarios. So if you understand the liquidity sweeping scenarios, you'll be unstoppable. Let me just read the chat right now. No metaphor, no profit. Do you perform like this in the live accounts as well, or do you only take one trade per session? Of course, I'm not booking 44 risk-reward ratio / session because I'm usually hard tipping my trades at 1 to 10 risk-reward ratio because I like to book my profits. So these aren't really realistic for my point of view. I'm just showing you the possibilities of this session. I would have been hard tipping this trade at 1 to 10 risk-reward ratio. I would have been hard tipping this trade at 1 to 10 risk-reward ratio. So overall, I would have been booked 25 risk-reward ratio in this session. So that means 25% in this single session, which is still incredibly good, right? 25% in one single session is still incredibly good. But yeah. You can show your colors on long and short settings. I will send the colors later. Price is reacting in 1 minute demand on the second trade. Who cares? I was just explaining for you during markets. Who cares? We are following the main trend. Demand isn't the main trend. Demands are keep getting broken continuously. Broken. Every single demand is being broken. Who cares if there was a demand tap? This demand is not a demand zone because this demand zone couldn't break above the supply zone. If this demand would have been a real demand, this demand should have break above this supply zone. Couldn't break above. It reacted on the supply zone, meaning this is a weak demand. This is a literal dogshit demand zone. This will be broken. Okay, where can we find this recording? I will upload it to the Telegram channel. They need opposite traders on Telegram. In the second trade, we have a supply level which has inefficiency. Why didn't we choose that? You mean this one? I was explaining this, that there was liquidity. I was just literally asking you guys that why can't you open a position on this supply zone? Because this was liquidity. This supply zone was part of the liquidity. This has been explained.
But we also
Was
have
this loss base of the
liquidity.
4 or 15-minute PY? I believe this was a 15-minute PY. Incredible. Okay, bro. When do you add 5-minute zones? I have to use them. It's your personal reference. If you like to add 5-minute zones to your chart, add them 5-minute zones. If you don't like to add the 5-minute zones, just leave them.
Hey, ma'am, can I ask a question, please?
Of course. Let me hear the question.
Okay, thanks. So in this trade, how can I choose or what? Whenever I choose the flip zone or some types of there's a valid supply zone who gets create break of structure, minor break of structure, sweep liquidity, and obviously also they're into something. So when I choose the flip one or
I was explaining this was the only valuable demand zone at this region. There weren't any demands. These were just sub breaks. These aren't real breaks. The real break has happened right here. The only real demand was here. This is the real demand zone because this is called the flip zone, and this is the only inefficient area. All of these areas, all of these candles are efficient. There's no inefficiency on these candles. So the real break of the demands, a real entry opportunity has happened right here after the break of this demand zone. These are just sub break of structures. These aren't real break of structures. Price could just easily reverse on this demand zone because this is the valuable demand zone. So entering above this demand zone is risky. Always mark your less recent valuable zone out. These aren't valuable zones. Sorry, just a minute, guys.
Thanks. Makes sense.
Okay, I'm here. Do you personally add 5-minute zones? Sometimes I do. If I see a clear 5-minute zone, I add them. You can see it on my markups. In the second trade, I mean, yeah, you already asked that. Second trade, before putting, we have a supplier which is inefficient. Why didn't we choose that second trade? It was this one, supply level which has inefficiency. Yeah, I was just explaining that. This is the flip entry right here. This is the correct entry right here, and these aren't correct entries. I was just explaining this. It was perfect, but the only problem that stick to the plan after a 4-hour supply, we need to wait for a 50-minute check. So the third trade is actual. Yeah, Nikita, according to the plan, that will be a good. That will be the best. I mean, possibility scenario. but I was just explaining that this isn't normal. This isn't a real demand zone. So basically this has to be broken. So we just have to follow where money is. And there was money, there's money. But this has to be broken because this is irreal. 50 pips in 3 minutes, 3 minutes is irreal. So we have to follow the money. And the money is below this demand zone. The money was below this demand zone, there was liquidity, everything was leading to a break of this demand zone, and everything was leading down to this demand zone. This was the real demand zone. This isn't the demand zone.
Hi, Marcy. Can I ask a question?
Yeah, of course. Let me hear.
Yeah, can we zoom on to the second trade? Yeah, you were saying that there is a liquidity, but what here is that we also have liquidity for this zone.
That zone has been mitigated. That zone has been mitigated by this movement. As you can see, this is being mitigated right here by this candle. This is a mitigation. So these aren't liquidity. These are just part of the liquidity. Of course, this is liquidity, but just this is a huge liquidity trend line leading up to this zone. And just look at the pattern. Extreme zone, liquidity, sweep. Extreme zone, liquidity, sweep. Extreme zone, liquidity, sweep. So I'm not really taking decisional zones like this because these are just part of the liquidity. There's clear liquidity.
So the second thing is, like we shouldn't here mark the wick and take an entry on the wick.
That actually equals to the 50% equilibrium entry. So that wouldn't make that much of a difference. The 50% entry is the same as the wick entry, as you can see.
Okay. So the third question is, when you mark 5M zones, do you like to refine them on 1M for clear mitigation and better entry?
Yeah, if I mark all your 5-minute zone and not a refined 5-minute zone, I usually refine those 5-minute zones to the 1-minute chart. But I'm usually just marking the 1-minute zones out.
Okay. Now, there's a thing like in 4 hours, if there are two 15M zones, so how should we keep it to the 4 hour, or we should mark both of the 15M? If on 4 hours there are two, so 15M.
I couldn't really understand the question, sorry.
If in a 4-hour zone, there are two 15M zones. So in that case, two unmitigated 15M zones.
That's
so
in the video course.
Case,
that's in the video course and the PDF. That's how you refine the zones. Just watch the course and the
it
PDF.
Actually, it is on the 4 hour. So we can't.
That's in. That's in.
Right?
If there's a 4-hour zone, and inside of this 4-hour zone, we have several 15-minute zones. You just keep it unrefined.
Okay.
Or you can just refine it to several zones. It's in the video course and the PDF. Chilling markets, no, there was a higher time frame every single time. All of these zones, if you follow the structure, here was the higher time frame tap. And all of these zones, this is a 5-minute zone, this is a 5-minute zone, this is a 5-minute zone. All of these zones were based on the higher time frame taps.
I have a question. Can I talk about it?
Yeah.
In our second trade, as you mentioned, upper than this level that we choose for the supply zone, we have another supply zone that push the.
You're talking about this trade?
Yeah. Before this level, we choose a level for supply zone, but upper than the zone, we have a supply.
I was explaining this. I've already explained this, that these aren't supply levels. These are sub breaks. These aren't supply levels. The only supply level has came into the market after a tap of this demand zone. The only break and real supply creation has happened right here because these supplies didn't break structure, didn't change character, did literally nothing. These were just inefficient movements. These aren't supply levels. The break of the demand zone, the less recent demand zone, has happened right here from this candle. This is the only real supply zone right here.
Oh, thank you for your answering. Thank you.
You're welcome.
Can I ask a question, sir?
Yeah, last question.
So, for example, in the first trade or in the second trade, our entry doesn't get tapped and price goes without tapping us in. So when do we know that we need to remove our limit order? Like, when do we remove our limit order from the MT4?
If another high criteria entry forms, for example, there's a supply zone with high criteria entry and you follow the trend. And for example, another high criteria entry is being formed. So here's the first entry. You got an entry limit order because there's liquidity. And another high criteria entry forms right here at this supply zone because there's liquidity once again. You'll set an entry limit on this zone, but you can also keep the limit order on this zone because there's a possibility that price will tag you in right here at this trade and continue, but there's also a possibility that the price will sweep you out from this trade and go up for the upper liquidity and tag you inside of this trade.
Okay, so we basically keep both the entries. If in case second entry pops up, second high probability entry pops up.
Yeah.
And one more question, that in the entry criteria tracker, there is one point that is named a pro trend or counter trend. So pro trend, counter trend with respect to 15-minute or 4-hour.
If you're trading on the 1 minute chart,
Yeah,
then you can combine the 4-hour and the 15-minute trend together. And both right here, both of the trends were bearish. 4-hour was extremely bearish, and the 15-minute has turned into bearish. And the 1 minute and the 5 minute was also bearish.
Okay, so when we get a 4-hour breakout structure, swing breakout structure, we expect a pullback, right? So when the pullback starts, 15-minute will get bullish, right? So basically, we are trading 15-minute that is counter trend of 4-hour, right? So in the entry criteria tracker, will we mark that point as check or not when we are trading a 4-hour pullback at that point?
I would recommend you to track that criteria as a 15-minute trend.
Okay. So it doesn't matter if you are trading a 4-hour pullback or not. We need to check the entry criteria tracker according to 15-minute trend, right?
Yeah, but just keep it in mind that keep in mind the 4-hour trend too. So you have to track all of the trends. You have to know all of the trends. You have to know the trend of every single time frame and combining every single trend. Actually, there's a video about this in the Telegram channel. I will check it out. Check it, please. That was a webinar, and the name is Fractal Confirmations, and that will explain everything for you about this.
Okay. Thank you so much for answering.
Marcel.
Thank you.
No problem, man.
Marcel.
Yeah.
You said you did. It's not a question. You said you did a video about liquidity explained last week. Can you tell me where it is? It is in Telegram or?
It's in the Telegram, and the name of that video is. That's exactly the last recent video on the Telegram channel.
Difference between choke and sweep.
Yeah, exactly.
Okay. Thank you, sir. Thank you.
Very welcome. Okay, guys.
Yeah.
So this was the backtesting session. I hope you liked it. Thank you guys for being here. Yeah, I really hope that this was a helpful session for you. Wish you all guys a beautiful rest of your day. Wish you guys a beautiful upcoming week. And as I said, I will sending the New York markups tomorrow. John will send the London markups. I will make a case study, etc. Everything goes like usual. From Wednesday, I will send in the London markups, and John will send the New York markups, and I will stop the